So I've gotten people's QuickBooks files that thought they were a disaster, but when I get in there, it actually made sense and I could use it. I've had other people say I'm really good at QuickBooks. I tie out everything out, and then I go and they have like negative cash or something crazy that way out of whack. Travel
is considered like mileage and...
Nope. So like if you're going to conferences or things like that, taking flights, those are all deductible expenses as long as they're related to what you do, to earning money. And what happens with the S Corp is that, say you have $100,000 of profit, as a Schedule C, you would pay self-employment tax on the $100,000, which is $15,000 plus. As a S Corp, if we did it retroactively, you would turn that same $100,000 of self-employment income into $100,000 of business income, and there's no self-employment tax on business income.
Welcome everybody, I'm Kamil Sarji, your host of Just 2 Minutes. And today I have Dan here. Dan, you want to tell us about yourself?
How you doing? My name is Dan Tucker. I own a tax and accounting firm in Johnston, work with small businesses on bookkeeping, tax preparation, tax planning, any type of financial needs for the small businesses. Yeah.
I'm excited to have Dan here today because we're going to talk about real estate and how he helps real estate agents set up their business. And also, I'm wearing the Johnson & Wales socks today because I went to Johnson & Wales, and so did Dan.
No. Sorry. I was a roadie ram.
Oh, you all right?
Yeah.
Okay, sorry, guys. So I'm wearing these socks to represent Johnson & Wales. I went to Johnson & Wales. My daughter goes there. Jay Woo, Wildcats.
Wildcats, yeah. Roadie for me, though.
It's weird because my son goes to URI.
Yep.
My daughter goes to Johnson & Wales.
Yep.
So it's kind of like,
Close, yeah.
Like we're brother and sister.
Close.
All right. So, Dan, you're here today, not just to talk about real estate, but really for the Just 2 Minutes questions.
All right.
Okay.
Let's hear them.
All right. So, I have my timer over here, 2 minutes. Are you ready for these questions?
Yeah, let's do it.
Okay. And go. So why did you go to URI, not Johnson & Wales?
I went to URI to play baseball, basically. And then, secondary, I got an education, but realized quickly that was really the primary because baseball was not a career choice that I was able to pursue. Yeah. But yeah, that was mostly, it was athletic related at the time.
Okay. Yeah. But I mean, if Johnson & Wales was the only school that offered it, would you go there?
Sure. I actually looked at Johnson & Wales, to be honest. Yeah.
Okay.
But I did not end up attending. Yeah.
Also, another question is, how come they took the letter S, right?
Yep.
And then they put 2 lines and now that's the dollar.
Yeah.
Why'd they do that?
I really have absolutely no clue why or who made the dollar sign. Yeah.
I'm assuming it's something to do with the letter S, like something that starts with S, I don't know.
Could be, yeah.
What's your favorite chips?
Favorite chip? I'm very plain, so I want my chip to taste like a chip. So I would probably just say a regular plain or ridged potato chip. But yeah, I don't want my chips to be McDonald's cheeseburger. I'd never... if I want to taste a McDonald's cheeseburger, I'd go for a McDonald's cheeseburger, not a chip that tastes like a chip. So barbecue chips are not for me, those kind of things. No.
Okay.
It's kind of plain.
If I put you in the kitchen and give you everything to make a dish, what's your favorite, what's your best dish that you can make?
Oh, that I would make personally? There's not much. I would probably heat up a chicken patty and make a pasta side. Yeah. I married well for that.
Oh, man. All right. That's great. Oh, goodness. What did you think of the questions?
Great. Yeah.
You like that setup?
Sure.
That I did with the socks?
Yeah. You did that on purpose.
Yeah.
Yeah.
I knew you went to Johnson, to URI.
Yeah, no. We just talked about it.
Oh man. Okay, cool. So Dan, you're an accountant. You help people with accounting. You help me personally. You help Gold Door. So there's different ways for people, real estate agents, to set up their business. There's like sole proprietor. There's S Corp, LLC, all this stuff. So what if you met with an agent? Like, how do you figure out what's...
So setting up an LLC gives you some separate protection for liability purposes. But in regards to the taxes, it's really their income kind of gives us an idea of what to do based on how much you're profiting. You know, there's situations where you want to turn yourself into an S Corp so you can save some money on the self-employment taxes. You know, when you're a sole proprietor or a single member LLC, you file your taxes on Schedule C, and you know the income on that Schedule C is subject to self-employment tax, which is the typical taxes that people see taken out of their paychecks when they're getting a W-2. So it's the Social Security and Medicare taxes. So there's just ways to save some money there when your income gets into the $60, $70, $80, $90,000 range. You know, it makes sense to make the switch at that point, really. You know, with a conversation about where you're projected to keep going to.
Yeah, because I'm assuming there's so many different scenarios and things to make that decision, right?
Yeah, yep. So, you know, there's other things that you can do in terms of retirement contributions where you can save some tax dollars, but that's really a separate issue because, you know, if you're filing a Schedule C, you make retirement contributions, you get deduction, you know, of your income, but you're not reducing your self-employment tax. You're not getting a deduction, you know, for your self-employment income in that situation. You know, like I said, the income is the driving factor with a conversation about where you project to go and, you know, what your plan is moving forward. Okay. If you have one good year, it's not always necessarily the best idea to do it because there are, you know, additional costs in becoming an S Corp and registering with the state. But, you know, it makes sense to absorb those costs when your income's high enough to grab enough tax savings to make it worth it.
Okay. If someone starts off in real estate, does maybe 1-2 transactions their first year, probably not.
So they're probably not going to need that type of tax planning. But, you know, it's also a good idea to get ahead of what you need to be keeping track of at that point, so you can get into some good habits before you end up getting very busy where it's tougher to create those good habits. If you're already doing that before you really, you know, start crushing it or bringing in lots of money, it just makes that transition easier. And it gives you always have the knowledge of where you stand throughout the year. So it makes it easier to tax plan and do things like that as well.
Okay.
Yeah.
As far as the agent, like, you know, very simple, like we have the income, we have the expenses. Is there expenses that are only valid for a maybe we should talk about the difference of like the sole proprietor versus you talked about LLC.
So in terms of collecting your data and financial information, it doesn't really make a difference if you're an LLC or you're, an S Corp or just an LLC. So filing a Schedule C, the expenses really get shown the same way. So that's why, you know, like I said, it's a good idea to get ahead of the game and start tracking those things correctly. So real estate agents, the big expenses is usually their auto. So you want to make sure you're tracking your mileage. You know, that includes any mileage going to open houses, showings. If you're taking continuing education classes, you know, all those things would fall under business mileage, and you get a deduction based off of what that mileage is. Cell phone is another one that you can carve out. You have to have the business and personal use because there's always a mix, but you can carve out the business use of your cell phone and take that as a deduction too. Home office is another one as well. But yeah, there's different things to carve out that we make sure we're getting all the deductions that we can get, so you're not paying, you know, too much tax on your tax return.
So with a sole proprietor, that's just a person with no...
Yeah, so a sole proprietor would be anybody that just wanted to start a business, or, you know, even a real estate agent, to be specific, that just starts in year one. They're really a sole proprietor unless they register an LLC. Then they would still be in business for yourself. You would be a single member LLC at that point. But there's for federal purposes, there's no separate entity. It all goes on your personal return. And then, you know, the next step above that would be to register as an S Corp, and you have to file an S election in order to do that. And they do allow you to go back 3 years. So if there's people that had some good years and were scared to do their taxes and hadn't done them yet, there's Form 2553 is the form you use to elect to make the S election. You can file that as long as there hasn't been any returns filed in the past, in that 3-year block. You can make the election to go back.
Oh, interesting.
Yeah, okay. So there's some avenues to save people money that think they're stuck and, we're scared to go and file their returns because they have a 1099 for $100,000 or something like that. Yeah.
Yeah.
Yep.
The sole proprietor is necessary, or can they just do it on their own?
Yeah, so a sole proprietor would
1099.
Yeah, so the only difference really is a single member LLC is registered with the state, where a sole proprietor, is just doing business, as they go. There's no other difference outside of that.
Okay. So tell me more about the electronic EIN number.
Okay, yep. So you can...
What's it used to? What's it?
Yeah, so an EIN is basically a social security number for a business.
Sole proprietor too?
So a sole proprietor can get an EIN, yes. So instead of having to use your social to file different forms, you get this EIN number from the IRS, and that's the number that you use on your forms. So if you're a if you're a sole proprietor, when you go to the IRS website to register for an EIN, you just select one of the choices is that you're a sole proprietor. The other choices are LLC, or you can be a corporation, you can be a nonprofit. There's a list of different, reasons why you need the EIN, and you select it at that point. Yep.
Okay.
So, and you do need a separate EIN if you were previously registered as a sole proprietor and you end up, for whatever reason, income tax purposes or liability purposes, if you register an LLC subsequent to that, you need to go ahead and get a new EIN as well. But yeah, each EIN is unique to that entity type.
How much is it to get an EIN?
It's free. You just go on the IRS website, irs.gov. There's a little toggle button to get an EIN, and it takes maybe 5 or 10 minutes to go and get.
I wonder why they make it free.
I don't know.
Oh, so that they can tax you.
Yeah.
It all comes down to tax.
They just want to track it all. Yeah, they want to track it. So
nice. Okay, with the EIN, you can open up bank accounts.
Yep. Yeah. So typically the bank is going to need you to have some type of documentation for the business to open a business bank account. So they usually ask for the EIN letter, or they'll go right to the state website to see that you're registered with the Secretary of State. So you need those things in order to open a business bank account. You can open a bank account in your own name with a DBA without doing that. But if you want it in the business name, you need correct documentation for them to do that. Yeah.
Okay. What about W-9?
So W-9 is, so it would be for if you have contractors working for you, they would have to fill that out so you could issue a 1099 to them at the end of the year. So I guess it would be more for the broker issuing it to the agents. But I guess technically if an agent had an assistant helping them out or something like that, and they were paying somebody checks to help them out. If you pay any unincorporated person or an unincorporated business over $600 in a calendar year, you're required to issue them a 1099.
$600,000?
$600. Sorry. $600.
Oh, okay.
Sorry. Yeah. Nope.
Damn, where's that job?
Yeah. Right. I don't know where that one is either. Yeah.
Okay. I have agents here who they want me to pay them directly, so I need the 1099.
Exactly.
They have to fill out that form, but I also have agents who want me to pay their corporation or LLC directly, so they give me a W-9.
Same thing, yeah. So W-9, either an individual or a business would fill those out. Yep.
Nice. As far as you're talking about auto, like paying for your mileage and all that, because real estate agents, we drive a lot. We drive all over the place.
Yes.
So is it benefit, or is it smart to buy it under the corporation, or is it better?
So it depends on where you are in your development. So, to start off, you're probably not necessary to buy, the vehicle through the LLC, because at the end of the day, you're going to pick up your business mileage anyway as part of the return. But once you register with the LLC, you end up paying commercial rates on insurance and things like that. So until you really need to, it's going to increase your costs for things unnecessarily, because we're still going to deduct it at the end of the day anyway. But, once your business is healthy and and it makes sense for you to turn into the S Corp and put yourself on payroll and, you're making some good money, then you can go ahead and register it through the LLC.
Okay. To buy things under the business, is the EIN what they look for as far as credit?
Yep. So they're going to look, but they're going to pull your personal credit as well, because they typically sometimes or on occasion you have to sign personally for them too, depending on how much history credit history that the business has. Yeah.
Okay. Interesting. So as far as buying the car or owning it and doing the mileage and all that, it's two separate, it completely depends on what you assess, like how they
exactly. Yep. If there's other people in your business that are going to be using the vehicle too, then you definitely want to get it, purchased with the business, registered with the business. But if it's just you driving to open houses and things like that, it's probably, it's just going to cost you a couple extra dollars and it's not benefiting you that much. There's nothing really different about it. Yeah. Because again, we're still taking the deduction on your return. So you're still getting whatever business use of the car that you're using. Yeah.
So my car is clean, from the outside, but what if I slap a picture of myself on the car? Made it ugly. No, and made it, advertising.
Yeah, of course.
What's up with that?
So if you're using your vehicle 100% for business, then you can deduct 100% of the cost, maintain and use that vehicle. Yep. So if you're advertising on your vehicle with the, picture of yourself, if that's going to bring you some more business, you go get them. Yeah.
Okay. You said you have to drive your car 100% business related.
So you don't have to, but in order to take 100% of your cost to run the vehicle, you have to use it 100% for business.
What percentage of the car has to be advertisement?
The whole thing.
Okay.
Yeah.
Interesting. So, because I see that a lot and I wonder, because sometimes, you can't guarantee, okay, you use this vehicle 100% for business if it's not wrapped, but, oh shoot, someone got injured, a family member, I have to go pick them up, bring them to the hospital. Now it's all right, so 98% was used. Yep. Can it get that silly?
So it depends on how silly you want to get. Yeah. So if you want to be that minute details, then yeah. At the end of the day, if you were to get audited, the IRS looks for mileage logs to proof of your business mileage. So the mileage log is supposed to include the purpose of the trip, the beginning and starting points, and how many miles, were driven on the trip. If you keep track of things for, I believe it's 3 months, the IRS will let you extrapolate that over a year and use that as evidence too. But, if it won't make sense for someone that is driving, so many miles one month, more the next month, if you're doing those things, you're probably better off trying to track that stuff so you know exactly how many miles you're driving.
Yeah. As far as home office, what's not part of that?
So the home office can be two different ways. You can take the simplified method, which takes the square footage of the home office multiplied by 5, and that's your deduction. Or you can
multiply by 5 to what?
So I believe it's 300 square feet. The deduction.
There's an amount. There's a set amount.
There's a set amount per square foot that you get.
Oh wow. Okay.
Yep.
Just like mileage, every year they change
for the home office. Yep.
Okay.
They don't change that every year. No. And that's just the simplified method. The other method is to carve out your actual expenses, if it's rent or mortgage, taxes, utilities, and you take the percentage of the home office. So if the home office is one room of your house and it makes up 10% of your house, calculate all those taxes and interest and utilities. And you get 10% of those as a deduction.
Interesting.
Sometimes it doesn't usually create that much different of a deduction, but it's really situation by situation. Yeah.
Okay.
Client by client.
Can they, if they have a garage that they want to build out as their office, expenses to...
Yeah, so actually that is sometimes can be a good idea for you, because you can actually pay rent to yourself for that garage and you can save on self-employment tax. So there's clients that will rent out their own garage from themselves, and you rent it out for $1,000 a month, and you still have to report that $12,000 as rental income, but you're reducing your self-employment income. So in that situation, you're saving self-employment tax on, the $12,000 of rent that you paid.
Wow. I love it. So people they come into your office and they're like, so I have this garage, and then boom,
let's turn it into an office.
You're like, okay, how can we make that happen?
Yes. Yeah.
That's amazing.
Yeah.
That's cool. That's why
you do it. Right.
Yeah, that's why I have you as my accountant. That's really good. So if you need to bring contractors in to build it out, is that an expense?
So all that costs would go to write off against the business. Any build out type of things that are to the foundation of the building, they have to get depreciated, so you don't take them all in 1 year. It'd be a commercial building, so it's 39 years you have life of the asset, basically.
Wow.
So you can deduct it over 39 years. So it's not a giant deduction every year, but it still helps, and it can reduce your tax.
Okay. As far as any other crazy expenses that you've seen, what's other crazy types of expenses?
For real estate agents? I don't know that I have any good real estate agent deduction stories.
It's very basic because what we do is just...
It's the mileage, the auto is usually the biggest deduction for you guys. But yeah, I don't have any crazy deduction stories.
Okay. If they were to hire, like you were saying, an admin, do they have to, and they want to hire them as an employee?
Yep.
Do they
can
have to switch their sole proprietor?
They don't. They don't. So they can do that as well. So you can be a sole proprietor or a single member LLC and run a payroll for other people. You just can't run a payroll for yourself unless you're an S corp. So if you want an assistant, they're going to be an employee. You can go ahead and get a payroll company or try to do the payroll yourself or work with an accountant, and you can run a payroll for that person. You can go and get the EIN like we talked about on the IRS website. You got to register the state to run payroll, employer account, and then register with the IRS for the EFPTS, which is the federal deposit system. But yeah, you can run a payroll for employees, just not yourself as a single member LLC or a sole prop.
Okay. How about suits?
Suits?
Buying suits and...
So no, actually, suits don't really fall into a deductible item. So because they have multi-purpose use, like you can wear your suit to a wedding or out to dinner, you can't take those things as a deduction. It would have to be specific uniform. You can get away with doing gold door apparel would be deductible because it's advertising.
We got that, by the way.
There you go, gold door apparel. Go get your gold door apparel. But yeah, suits like that. So, for example, myself, if I wore a suit to work, I'm using it for work, but because I can wear it to a wedding or dinner, it's not anything that's deductible. Nurses, scrubs, things like that would be deductible because it's a uniform and you're only wearing it for business purposes. Steel toe work boots for laborers or things like that are all 100% deductible. But warm weather gear is a gray area. It probably would fall under not deductible too.
Wow. Okay. So dress shirts with embroidery, gold door realty.
We could fit those in the box, not a regular dress shirt. Yeah.
Okay. How about dry cleaning?
It's all personal expense.
It's personal. Okay. Because you could,
unless you're dry cleaning.
Get a dirty.
Yep. But if you're dry cleaning your scrubs, that's one thing. But yeah, dry cleaning a suit it wouldn't fit in the box.
Because how do you tell? Oh no, I got it dirty at work. It wasn't when I was at this party.
Right. Yeah, they don't care anyway.
Yeah, I'm trying to think of shoes that are, you can't really, it's not.
Yeah.
Nike, I think you can design, you can customize.
You can.
Gold door?
You could. It depends on how aggressive your accountant wants to be when you present him that expense.
Oh man, so we talked about expenses. I think we covered that.
Yep.
Right. Let's talk about income.
Okay.
Income. So with income, again, you look at that as, mostly as far as a broker, I'm paying them as a 1099 or paying them to their business. So if they're how do they choose if they're gonna I think we talked about.
Yeah, what type of entity they're going to be.
Yeah.
Yeah, so it depends on, first we start with whatever your 1099 is for, because that's going to be your gross receipts, your top line. And then we need to carve out and figure out what your deductions are for the things that we talked about, the auto and the, cell phone, any type of continuing education classes, advertising, business cards, all those types of things, signage for the homes. I don't know if the agents are responsible for that themselves, but whatever, staging for things like for the open houses, all of those things come off. We come up with whatever your net profit is, net income. And then at that point, if it's 20, 30 grand, we're probably just going to leave you as a sole prop and file the Schedule C, and you pay a little bit of tax. It's probably nothing crazy. But when you get into the 50, 60, 70,000 dollar range, we'll start having the conversation about, hey, you might want to become an S corp. We can save you some self-employment tax. What's your year going to look like moving forward into next year and after? If you're already at 80, 90, 100,000, it's almost a no-brainer at that point to do it. And what happens with the S corp is that, say you have $100,000 of profit. As a Schedule C, you would pay self-employment tax on the $100,000, which is $15,000 plus. As S corp, if we did it retroactively, you would turn that same $100,000 of self-employment income into $100,000 of business income, and there's no self-employment tax on business income. So, right off the bat there, you'd be saving $15,000. But the caveat is, once you're an S corp, you have to pay yourself reasonable compensation, which means that you have to run a payroll for yourself, and that can vary depending on how much profit you make. But we want to play with that number to make sure we don't run too much through payroll, because if you turn yourself into an S corp and then pay yourself all your profit through payroll, you just defeated the purpose of creating the S corp.
So it's got to be a steady amount of money?
So big picture, it doesn't necessarily have to be steady as in I'm making X a week or X a month. But if we look at year as, the tax return or tax filing periods, therefore, the January through December time frame. So we're more concerned where you are for that time frame. And if it makes sense to do the S corp, we run the payroll kind of as you're making your money, if that makes sense. Monthly or quarterly is sufficient to run a payroll for yourself at that point. Because at that point, you're running the payroll because you're an S corp owner and you have to do it. It's not like you're having employees that you need to pay week to week, because if you're doing it right, you still should have profit left over that is still your money you take as profit distributions too. So when you're an S corp, the way you pull money from the business is through payroll and profit distributions as well.
Okay. And C corp?
C corp is its own separate entity. So in order to get money out of the C corp, you would have to pay payroll or dividends, which is that might be a whole separate episode. Yeah.
Okay, so it's complicated.
Yes.
So if an agent already started receiving money to themselves for the year, it's easy for you to switch them over to whatever category they need to be in.
Yeah. So like I said, the S corp, it gives you have the ability to go back 3 years.
3 years.
So if there's someone that came in and still needs to do their 23 tax return, there's still things that we can do going backwards to make it so they don't get crushed as much as they could, in a different scenario. Because again, we wouldn't even be changing how much their income is at that point. We would just be changing the nature of their income and what line it goes on the tax return, which can save you significant tax dollars sometimes.
What do you think agents mostly forget about, declaring as far as expenses? What's the most common thing that it's obvious, but they...
Yeah, so I would say carving out the cell phone. People don't always think of. Auto is usually a big thing. Internet, people, so that home internet would fall under the home office too if you were taking a home office. Okay. So it all goes together, Yeah.
So as far as mileage, what's the best way to track that? You just get...
There's apps that are out there that you can download. Some people just use Excel. And, some people still, I have people that I get handwritten notes from at this point. But it's all personal preference. Everyone's brain works differently. So however your brain works, that's how you should compile that information, yeah.
Wow. So you mentioned Excel and other ways that people are tracking. If someone bought QuickBooks and has all their stuff in there versus someone with everything in Excel, like here's all my expenses, or versus someone who has QuickBooks, they put all that stuff in there.
Yeah.
Which one do you prefer, or which one is more a pain?
It really depends, because either one could be super clean or all over the place. So I've gotten people's QuickBooks files that thought they were a disaster, but when I get in there, it actually made sense and I could use it. I've had other people say, I'm really good at QuickBooks. I tie out everything out. And then I go and they have like negative cash or something crazy that way out of whack. Same thing for Excel. If you're tracking everything in Excel and I can tie out your sheets to bank statements and it all flows and makes sense, it's easy to work with. Someone could give me an Excel that is just a hodgepodge of numbers and it doesn't make sense. And then I have to go and either ask them to redo it or, do the legwork and summarize it all, ourselves.
Yeah, I think Excel is probably the easiest way. If I were to do it, I would use Excel.
Especially for the mileage. Yep.
Mileage and credit card, you download it as an Excel file and just put it in and just categorize it that way.
Yep. Most of the accounting softwares at this point have download features and they memorize transactions and things like that. So, sometimes you got to do a little bit of legwork in the first few months to get everything set up. But there's ways to create efficiencies for yourself using the accounting software. But like I said, Excel works wonders too with the formulas, and then I work with Excel files, QuickBooks files, different types of accounting softwares.
Yeah, I love Excel. But I'm not that kid who has all their expenses and everything in there for the business. I have to use QuickBooks, and I've been using it for a few years.
Sure.
And you've seen me with QuickBooks.
Yeah.
Why is it so complicated?
Yeah, there's just a lot of moving parts.
From a distance, you look at QuickBooks and you're like, all right, this seems easy because it downloads everything. You start using it, you're like, wow, reconcile, like all these different things. And, oh my gosh.
Yeah, there's some quirks to it too. Downloading the transactions, sometimes it will double up on things. But like I said, if you get a good base and get it set up correctly ahead of time, or when you start, before you're doing, hundreds or thousands of transactions, you can get you can get everything in place where it's coming over clean from the download too. But yeah, it can be complicated when you get into, invoicing and receiving payments, running your receivables or payables through QuickBooks. Some people try to get a little too fancy and they end up having to enter things multiple times because they're setting up it as a payable or a receivable.
Wow.
So.
Oh man. Yeah. I just wish that they made it simpler. They tried, right?
They try. So, but I bet it wouldn't be simple for me to go and try and sell a house either, right? So that's why.
I'll teach you though.
There we go.
I'll teach you.
I don't know who it would be harder for, you to teach me to sell a house or me to teach QuickBooks.
How many times have you taught me QuickBooks?
That's what I mean, like flip the coin, yeah.
Gosh.
It wouldn't be a one-shot stop if I came to you to learn the real estate business. Yeah. It would be multiple,
Yeah, there's a lot
sit downs to learn. Yeah, same thing. So the tax code is ever changing. So yeah, there's a lot to it, but that's why we barter services, and there's all different people in the world to help each other out, right?
Yep. Anything else that I missed that you think that I should have mentioned?
No, I think, just like I said, getting ahead of your tracking of, income and expenses makes things easier for you. You can do it going backwards, but if I asked you, what you spent money on last month or 6 months ago, it's going to be a lot easier to recall what the money was that you spent on last month. So if you hold off on summarizing things for yourself, people end up forgetting about, things that they did or money that they spent. So it's just when you have the fresh mind, you're less likely to miss things like that. And at the end of the day, you want to pay the right amount of tax. You don't want to pay the government too much money.
Yeah.
Because they get enough.
Besides from expenses and Excel spreadsheet. So there's that's great that you put all your stuff in a spreadsheet, but now you have to categorize them so that they go in the right spots.
Yep.
Before we talk about categorizing, does it really matter? Can it just be stuff to help my business run?
Yep. So At the end of the day, not really. You know, if you have a business expense and it's an office expense, or if it's utility, at the end of the day, it counts the same, you know, on your tax return.
Yeah. What's the profit? Basically?
Yeah, exactly. If it's in the wrong category, at the end of the day, there's not anything that would change because it doesn't change what your bottom line is.
Okay.
It's more, you know, if it's a business expense or personal expense, those things obviously are going to change your bottom line. But
okay, so if I mess up and put the wrong category, you're
good. Fine. Yeah. I might catch it and fix it before I file your return anyway, and you just might never know. But either way, it wouldn't matter. Yeah.
As long as I'm putting the income correctly, and oh my gosh, okay, that really did a lot of stress. Yeah. But as far as categories, there's marketing, travel. Travel is considered like mileage and
nope. So like if you're going to conferences or things like that, taking flights, those are all deductible expenses as long as they're related to what you do, to earning money. So really any expense that you incur that you can, you know, relate back to generating revenue for you, that's what a business expense is in its simplest form. Yeah.
Okay. So Tony Robbins in like Dominican Republic, or, you know.
If Tony Robbins is going to do a seminar in the Dominican Republic, he's writing off his flight. Yeah.
Well, no.
You too. Yeah, you too. Yes. If you're going to a seminar, yes.
I mean, it's motivational, like sales, you know, it's related.
Yeah. Yep. So the way that works too is, you know, you can mix vacations into that too. So if you were to go to his conference, your flights would be deductible. You know, meals while you were there at the conference would be deductible. If you stayed extra days to, you know, see the island or whatever, those excursions and things like that would not be deductible. So you would have to carve those things out. But, you know, you can get the cost in the hotel.
Awesome. Is there a limit on how much I can eat?
It has to be reasonable. Yes.
Okay.
Yeah. So if you have extravagant expenses, the government would, you know, the IRS would throw those out if they were to audit.
And if you got like a maybe business opportunity and you took people out to eat on the trip, that's covered.
That would be a deductible business expense. Yep.
Nice. Okay.
Yep.
What if you're not traveling and you're having a meeting with a client who you closed the deal, a big deal? That's
so
deductible?
meals would be 50% deductible. Entertainment is no longer deductible under the current tax law. So they made a change. Before, if you had, you know, season tickets to sporting events, things like that, golf memberships used to be able to write off, which you no longer can. If you go to a sporting event with a client, the tickets aren't deductible, but if you're there and spend, you know, $100 on food and beverage, that's 50% deductible. Okay. So you can still carve out the meals at the entertainment and they're 50%, but the entertainment is no longer deductible.
Okay. No longer fully deductible like it used to be.
Correct.
You think this administration is going to change that?
Something will change overall because the tax laws expire at the end of the year.
Oh.
So from the changes that were made in 2018, they were 2018 through 25. So they expire at the end of 25. And we're going to have probably something new and different, you know, for next year. Won't probably find out till the end of the year. They're going to tell us that they can't go home for Christmas until they finalize the bill, and they're going to, you know.
Any rumors of what it could be?
Not yet. Anything at this point. It's so early that it's whatever they say now is definitely not going to be what the end result is. But yeah, they're going to go back and forth right to the final hour. So they end up conceding things, and we will have whatever the final bill is probably in December at some point.
Okay. So business meeting with fellow agents, 50%.
Correct.
What if I take everybody out for a team meeting at a hall?
So that would be 50% as well. Yeah.
Okay. What scenario would it be 100%?
So it would have to be a 100% deductible. So meals while you're traveling are 100% deductible.
Okay, that's the only.
Yeah.
Okay, so 50%. Whether I take one.
So yeah, I believe you can do like a company party. If you're doing dinners and things like that, that would be 50%. But if you did like a Christmas party or a holiday party, we could deduct that.
Okay. Holiday bought a party and I bought cookies.
Yeah. Yep.
Okay.
Sure.
Or had Subway bring little. Okay. But not sit down at a restaurant. And have a
Sure. It'd have to be like a holiday party. Yeah. Not like not going out to a restaurant. Yeah.
Okay. Sales meeting once a month.
Sales meeting once a month. Yeah.
That's 100.
Yeah.
Okay. Cool. Wow. Goodness. You don't get stressed out with this stuff?
No. No.
I'm already stressed out. Like,
yeah.
This is like a lot of.
Yeah.
You have to keep up with all these rules and try to be creative. And I've seen the spreadsheets that you've had. Like, you're like, okay, this is one scenario. This is another scenario. See how this one's better, Kamil? And I'm like, yes.
That's it. Yeah. I don't stress about much in my life. So.
Nice. Yeah. You're a chill guy.
Yeah.
Yep.
Yeah.
So before we end, I just want to ask you, because everybody's curious about this.
All right.
When's the best time during tax season that the accountant is not as busy?
Not as busy?
I mean, you're busy the whole time.
Yeah.
I know you like.
So January eases into it because, not everyone has tax forms out yet. But now I'm kind of getting prepared. Some 1099s start coming in, things like that. Some of the businesses that I do bookkeeping for, try to get ahead there. But no, the best time is after tax season. But probably not April 16th because I'm not going to answer my phone that day.
Taking a day off.
Yeah, I'll probably take that day off.
Good.
But right after that, once May hits, that's probably a good time to...
May, okay.
Yeah.
Okay. Yeah, and then you have the corporate tax.
So there's the March 15th is the deadline for partnerships, S corporations. April 15th is the deadline for personal returns and C corps. If you extend the business returns or the individuals, it's a 6-month extension. So there's another deadline for me in September and October. Not as crazy as the March and April deadlines, but yeah, if the returns that are on extension are due in September and October.
Okay.
And the extension is an extension of time to file, not an extension of time to pay. So if there's tax due, it's due by April 15th.
Oh,
it's due by April.
So you have to predict how much you owe.
Sometimes, yeah. And sometimes you have an idea or you try to cover what you think it's going to be and, hopefully you're close, but you can be as close as whatever estimates that you get from the client at that point. Yeah.
Wow. Awesome. So, Dan, how do real estate agents and others find you?
Tucker-Lucas.com is the email address. My info's on there. You can shoot me an email, give me a call. We'll be happy to help, talk you through whatever situations you get or you have, and make sure that we are a good fit for each other. And if we are, we move forward. If not, I can probably help you out with who you should be working with if it's not me. So very honest, down-to-earth person. And if it's a good fit, it is. If not, I'll let you know and give you an idea who would be a good fit for you. So
awesome. Cool.
Yeah.
Thank you very much. All right. Thanks for stopping by.
Thank you.
See you soon.
Appreciate it.
My agent's got a squad. We all in the zone. In-house help, so they ain't doing it alone. They focus on clients, negotiating win, while the back end's handle, man, that's how we spin. I hand them business, watch them all climb.